Welcome. There are many investors having dividend strategy. Also, dividend portfolio they will be having, and they will not have any other growth stocks. Why they are going for dividend portfolio? Because they think the stocks will be stable and it will not fall too much, and also there will be some dividends regularly they will get. So, like bank FD, they will be getting regular dividends amounts. But whether it is a right strategy, if they do some wrong strategy, it will be their portfolio will get severely affected. Why? You can see TCS. It is a regular dividend paying company only. But what happened? You can see if you have a dividend portfolio with IT stocks like TCS, Infosys, and all, your portfolio would be bleeding. Already due to Iran war, all the portfolios are getting bleeded severely down. So now you will come to know how to avoid those kind of mistakes when you have a dividend portfolio, how to diversify, how to keep your portfolio, dividend portfolio in green. Say, now you can see the TCS dividend yield is very good dividend yield 4.1%. Also beta is very very low. Generally IT stocks, even though they have some volatile, little bit stability was there some time back. But nowadays it has gone. You can see the last 12 payouts of TCS. That and all good only, fine only. But there are many YouTube channels recommend don't go for government stocks or PSU stocks because there will be government control. So don't buy those stocks. But you should not blindly follow those advices. You have to do your own analysis. So if you see the ONGC, it is also having very good dividend yield 4.8% and beta is high 1.01. Dividend history they frequently give dividend in a year 6 rupees 615 like that. So they pay regular dividend. It is a government company only. But for the last 1 year, it has given 24 plus 24% return. TCS, it has given minus 24% return. So now you can understand both are good dividend paying stocks only. But think if you bought 10,000 each ONGC and TCS, what would have happened? Although you would have got some 200, 300 rupees dividend in both of the shares, but TCS would have been down almost 50% down. So it would be portfolio value of TCS would be only around some 6,000, 4,000 would have gone. Whereas ONGC would have saved you. It was up 24%. So you can see the comparison for the last 1 month. TCS returns minus 17%, whereas ONGC 10%. 3 months you can see minus 15 TCS, whereas ONGC 24. So like that, 12 months returns also you can see 24, 24. Just opposite. TCS minus 24%. This is plus 24%. So what are all the rules? How you can avoid dividend trap and make your portfolio diversify. Don't put all your eggs in one basket. So if you have a 5 shops and all the 5 are selling only umbrellas, only in winter season or rainy season, it will be good. Otherwise, in sunny summer, every shop will be nobody will be buying. So like that, you should not put all the good dividend stocks, yield stocks in one sector. You have to diversify. So as I told, we cannot blindly invest in single sector. Some people are saying good stock, it is reliable like that. What happened to TCS IT index? It has taken a severe beating. So that's why you have to have some other companies also, like ONGC, like that. You can see the returns now. It has given a good returns ONGC for the last 1 year, whereas TCS 25% down. So what you have to do is you have to, if you are buying ONGC as a good dividend yield stock, you should diversify. You should not keep only ONGC. I'm not recommending. Don't keep all your dividend stocks in one sector. There are very good dividend yield stocks in different sectors. For that, you can go to my playlist. I have released part 1, part 2, part 3 videos in metal sectors and all. Vedanta and all is having very good dividend yield. This and zinc. So you have to diversify these sectors. Even if one sector stocks falls, another one will match. So avoid companies with too much debt and dividend yield minimum 3% you have to look for. And how to maximize the dividend yield, you can refer my playlist videos. So I'm not a SEBI registered consultant. I'm Ganesh Babu from GB Investor Zone. Now you can see the levels. I'm not putting TCS levels, chart levels, because it has gone. It will be very difficult, take time. If you want to comment, I will put the levels for TCS chart levels. For ONGC, I will put now. If you like this video, if you found this is very useful, kindly subscribe and like. Definitely you will come and refer my levels again. At least at that time, subscribe and like. So this is the way to diversify our dividend portfolio so that the growth is maintained as well as there is you regularly get dividend. This is the best dividend strategy. Thank you. Welcome. ONGC share is going up because of Iran war. Crude oil is going up. ONGC is a proxy for crude oil. Not only that, it is having a very good high dividend yield share. Now we will know also how to maximize your dividend yield. Three ideas. ONGC is having a 4.8% dividend yield and beta value is 1.01 only. And last 12 payouts dividend each year it will give 2-3 times dividends, which is very good for us. And also if you see 6 rupees already it has given this year, and 6 rupees 1.25, 5 rupees 6 rupees, so regularly it pays dividend. Three ideas to maximize your dividend yield after seeing the technical levels. That is where you have to be very important to maximize your dividend yield. Presently ONGC share is going up because of crude oil Iran war going up. This is the rising trend line, which is a good support. And if you see, this is the multi-week support line, stop loss hunting line, stop loss hunting line. If stop loss hunting line comes, price will hunt your stop losses. You can see my previous videos. And below there is a multi-day gap line, again multi-month stop loss hunting line, again multi-month gap line, again bottom end of the channel, again there's a multi-week gap line. So now exactly it has taken a resistance at my middle end of the channel. Bottom end of the channel you saw, now this is the middle end of the channel. Then there is a very strong multi-month resistance at 297, another multi-week resistance. Again there is a gap line at 323. So probably if it gives a big candle gap up opening with heavy volume, it may go and touch the gap line. Once gap line is closed, sometimes it will fall or it may go again depending upon the demand. Again there is a stop loss hunting line multi-week. Normally whenever there is a stop loss hunting line, price will definitely touch the stop loss hunting lines and eat your stop losses. So you have to be very careful whenever this level comes. Then all time high. Then if you see top end of the channel. So now we will see the ideas how to maximize the dividend yields. Reinvest. We have to reinvest whatever dividend we get. Also whenever X dividend date, if they give 5 rupees, it will fall 5 rupees on that day. At that time you have to add more shares. And you have to enter at the swing bottom. As I told, this is the swing bottom. So at that time you have to go and enter so that your dividend yield is maximized. If you like this video, if you found it is useful, please like and subscribe. Thank you. This is Ganesh Babu, GB Investor Zone.